Here is the AI question most corporate leaders are still not asking. What happens if the AI fails and the insurance does not respond? Not the demo, not the proof of concept, not the vendor presentation, the actual loss, the lawsuit, the shareholder claim, the regulatory investigation, the customer harm, the operational disruption, and then the sentence no executive wants to hear. This event may not be covered. Before we go further, two terms matter. E&O means errors and omissions insurance. In plain English, E&O is designed to protect a company if its professional services allegedly cause financial harm. That could include incorrect AI-generated recommendations, flawed AI analysis, defective AI-enabled services, or business losses caused by inaccurate AI outputs. Now consider a second term. D&O means Directors and Officers Insurance. D&O is designed to protect company leadership, executives and board members if they are accused of failing in oversight, governance, disclosure, or fiduciary responsibility. In plain English, if shareholders or regulators claim leadership failed to properly govern AI risk, D&O may become relevant, and that changes the conversation entirely. This is the red zone, because AI risk is no longer just a technology issue. Information technology is becoming a liability issue, a governance issue, a disclosure issue, a contractual issue, and increasingly, an insurance issue. Many organizations assume their existing policies will protect them. But artificial intelligence does not fit neatly into traditional insurance categories, and that is where the danger begins. If an AI system gives incorrect financial guidance, is that covered under errors and omissions insurance? If an AI decision leads to shareholder litigation, does D&O respond? If an AI agent leaks confidential data, is that cyber insurance? If an autonomous AI workflow causes operational damage, who owns the liability? The vendor, the enterprise, the board, or no one until litigation decides? This is where executives need to pay attention. Some insurers are introducing AI exclusions. Others are tightening policy language. Some risks exist in dangerous grey areas. Leadership assumes protection exists until a claim tests the policy. That is not a technical problem. That is a balance sheet problem. This is why AI governance can no longer live only inside information technology. The chief financial officer should care because uncovered losses impact enterprise value. The Chief Information Security Officer should care because AI expands the attack surface. Procurement should care because vendors may push risk back onto the customer. And the board should care because AI oversight is becoming a governance expectation. Before AI scales, organizations need proof, not optimism. Proof. Has the AI use case been risk-tiered? Has legal reviewed the liability exposure? Have insurance coverage been mapped? Have AI exclusions been reviewed? Have vendor indemnities been tested? Is there a documented escalation path? And has leadership identified where the company may unknowingly be self-insuring AI risk? A proof of concept that ignores liability is a future dispute waiting to happen. The most dangerous AI risk is not always the dramatic failure. Sometimes information technology is the quiet assumption that someone else will pay: the vendor, the insurer, the customer. But when AI becomes embedded in operations, accountability cannot be outsourced. This is the green zone. Governed readiness means AI deployment includes legal review, insurance review, vendor accountability, auditability, incident response, human escalation, and executive oversight. That is what enterprise readiness actually looks like. Not uncontrolled experimentation, not governance theatre, a tested operating model. AI may create enormous value, but information technology may also create liabilities many do not understand. And exposure without coverage is not innovation. Information technology is enterprise vulnerability. The framework is simple. Red, identify the liability before the loss. Yellow, prove the governance before scale. Green, deploy only when accountability is real, because the worst time to discover an AI exclusion is after the claim is denied.